Hey people, what's up? It's your mentor KT Genesis Anti-Social Snipe, and welcome to another session, another training session by your boy. Because I'm not yet a man, I'm just 20 years old. Yeah, it might sound crazy. Yeah, but it is what it is. So today, welcome to another session, ladies and gentlemen. Today we're going to talk about liquidity. So what is liquidity? Liquidity is referred to a degree at which the market is quickly bought or sold without affecting the asset's price. Fact, that's what liquidity is, and these are the things running the market and controlling the market. And I bet you that 95% this is what control the market, and this is what they're going to be. It's off of these that you're going to be your directional band, because these are the keys ruling this market, right? So you see in the areas I've been marking, I don't know, my connection bugging and it's probably disturbing right now. So those are the areas I've been marking, right? Those are the areas of liquidity pool, right? Once you see the market doing these, like these are where liquidity is. You see the spots are marked like that, and once you see the market come there, drops, come there, come back up, fails to go above this liquidity, there's no problem, comes back below, takes out this previous liquidity where you see the mouse is at, drop and take back the previous liquidity. Now you see this stop loss on this drop is always done by a week, and it goes back up and closes. This is to tell you that the market is about probably to reverse or do a long bullishness into the market after this, right? And now what does the market do after that? You see the market go up, take out this previous liquidity, drop, respect this resistance level, respect this support level, and you see it bounce off of that support level, taking out the previous high where the liquidity is at, where the people that were selling, they put their stop loss. So you go went back out, hit their stop loss, come back, bounce still at the support level, go back up, check back the previous liquidity, and you see how it's been doing the same thing, especially when you have a target to attain, right? When you have its target to attain. So you see when it's done attaining that target, you see now how the market breaks its structure, right? And you see when you see this area here, what did I teach you about this area? Fair value gap, which is always gonna be filled. You see this week come back up, excuse me, fill that area. Ladies and gentlemen, we fill back that area. You see, after filling that area with a week, you see how the market drops. Why does the market drop? A pool of liquidity here for those who were buying, a pool of liquidity here for those who are being bullish, probably hoping it was gonna go way better than that. You see a pool of liquidity there is dropping, right? You see how the market dropped drastically. It dropped here. It made a move of, I think, after arriving this area, it dropped 200 pips, ladies and gentlemen. It took out these stop loss, these stop loss, these stop loss, this stop. It took out all of those. Now, what did it do? It did a retracement off of what? A mitigation block. A mitigation block is here. You see how you respect that mitigation block, filling the fair value gap over here, and it drops back. And once it drops back, what does it do? It take out the previous low where the liquidity was at for the people that were still buying. You see what these markets are doing, right? Once you take out this liquidity, you see where it's at. Now we have what they call double bottom, creating a fake uh, support area for it to probably get smashed area later on. So when it creates this fake support area, what does it trying to do? It's trying to tell people, oh, there's a fake support here, so oh, you can buy this. And now, if you don't know what you're doing, you're still gonna buy this like a dumb person that doesn't even know what the market's trying to do. And once you buy it, it's gonna give you hope, and you're gonna expect that probably you should go above these other stuff level. You see the resistance over here is strong, support over here excuse me, the resistance over here is strong. You see the rejection you get, and you see once you get that rejection, you come back where you thought it was a fake, it was a support, why in fact it was a fake support. You see it get smashed over here, taking out the stop loss of about uh, uh, 23 pips or some or more. I took out the other stop losses. Why? Now, what gives you the conclusion that you think this is still gonna continue to drop? What happened here? What happened in this box here? We had a break in market structure here. You see, it's been bullish all this while. All this while it's been going up. But now what happened here? You see, it break all of a sudden. It took out the stop loss of this of like 200 pip as you measured, and you see it went back up, testing this, giving you an opportunity if you know what you're doing to sell it at this area again, right? That's the second opportunity. It give you still the same opportunity for you to try to sell that thing where it's at, right? And once you sell it, if you know what you're doing, you sell it there, you see how it moves below, right? It dropped. Once you see that break in market structure, now it gives you a target. Like you will not be looking for buy opportunities into this market, now you'll be looking for sales opportunities, right? Once you come back up like that, it give you another entry, filling the fair value gap from what we learned. You see it dropped, it took out the previous low. You see uh the failure in the market trying to go back up, the failure and it pushing back up. You see the failure in the market, failing to break this previous high. You see, try and create and bouncing off a fake resistance over here, giving you hope that oh, this is gonna be a fake. Excuse me, bouncing off this fake support, giving you hope oh, this is gonna be a fake support, and you're gonna buy it. Where you buy it, so you probably go into profit of 10, 20 pips, 30 pips, and you expect it to go up. Well, you can still buy this. You can still make money off of this if you know what you're doing. But you want to be looking most of the times for bearish opportunities. And you see, once the market do that, it drop. And once it's dropping, where the main target is at these previous areas. I'm gonna put these lines here so that y'all gonna see how this work. I'm gonna put these lines here so y'all should see how this is very, very active and accurate, right? You see what happened? He hit the stop loss. He hit the stop loss of these people dropping, and I think I saw this before sending a buy opportunity to my team. Oh, it was a sold. I sold it. You see, it made a fake resistance over here. Came back here, making us if we want to go up, respecting this bearish order block here. Respecting this bearish order 1 hour bearish order block here, bouncing off of that, and you see it's dropping it's dropping, right, coming back, giving you another sell opportunity of this mitigation breaker blocks, what it's called, another sell opportunity here. You see the market drop, and now it came back up where I give you the buy opportunity, filled this fair value gap, where filled back this fair value gap, where filled by this fair value gap, and still it's about to drop. It's about to drop. And what is the target? What is the target of this? I think This target is here. Now these are the targets here, 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 and here, and probably will fill this fair value gap that we have here also before going bullishness, right? So you see, this is what I'm expecting GBP cat to do. See all those points of um, um liquidity pool that I've showed you. That's how the market works, right? And I'll tell you, this market, you see what we have here, right? This curve going up around like that, right? This market, these are the least buying areas you want to be buying market at because you think there will be liquidity pool over here. The reason why it's the least area you want to be buying here is because the market has been creating a lot of support and resistance and a lot of support and resistance. So the market can't just go bullishness up all the way up, even though you see a liquidity push over here, unless we have a red folder that is going to push this market to the upside, like FOMC, NFP, non-farm payroll. That you see the market is going to go bullish all of a sudden on a one candle, right? But I think this is normally when you see this and you see the market come back like this with the last move, it's giving you a sell opportunity for you to take a sell at this position. Because once you take a sell at this position, these are the selling target, the downward target that the thing is supposed to go head at before either go back bullishness and take out this. These highs are still to be taken out in the future, but it's not going to happen right now because, like I said, the market when she was doing this was creating a lot of support and resistance, and it cannot just be breaking up like that. So you have to see some rejection off of that support and resistance, and it's what you're seeing over here, over I think over here. That's what you're seeing over here. Support being respected, support being respected, giving opportunity. So, support being respected, and I think it's gonna be bearish all the way down. I think the market is about to sell. So like I said, this should be the least market you want to trade. Once you see the market doing this, so when you see the market doing these things, going up, coming down, up, coming down, up, I know this is taking time and I know I should have done this, but I like doing, like I said, I like doing my things live so that you see what I'm trying to explain here. It shouldn't be like I'm doing something prepared already or stuff like that. So I prefer doing most of my things live so that you see how it is. And pardon me if I'm taking more of the time. It's not what I wanted, but it's worth the time spent. Right? Exactly. Exactly. Now, like I said, you see this thing that I made like that, it marked something called a graph, right? Not something called a graph. This should be the least market you want to buy at, because the market will hardly go back up with a full force trying to take out all this other liquidity here where it first of all started, right? The market will hardly go back up to this case. So what you want to do is you want to sell this at the position. If the market goes back and come back at this and takes a certain area full of um, resistance, right? Because you see what this hit the resistance area. So you want to see the market go bearish up, looking for bearish opportunities over here, and our target should be here, uh, here, and this fair value gap. I want to say get free, and it can bounce off of this other block here, off of this one other block here, and before going back up. So I think this is a nice trade for me to give out, but I'm gonna give out to my team. So you don't want to trade this type of opportunities, right? You don't want to trade this type of opportunities, and so should be the reverse. You don't want to buy this, and so should be the reverse. If this was opposite, if all of these, if all of these was the opposite, right? Wasn't going up like this and down, down. If instead it was going down, down and up like opposite of this graph, then you don't want to be selling this, because it's not going to drop actually drastically like that. It's going to buy, right? It's instead going to buy. Now, what it does at times is when it comes to create this, it takes it does a pullback, and now once it does a pullback, give an entry for those who know what they do, what they're going to do, and you can sell these right away instead of buying this position that you thought you could buy, right? But instead, you don't want to buy this, you want to sell it to the previous liquidity areas and the previous lows. If they have a fair value gap, you want to see that fair value gap get filled. If there's a liquidity block or there's an order block below, then expect a bounce off that order block before you see a rejection to the upside trying to take out the previous liquidities where we started this at. So those are the things you want to see. Those are the liquidity pools controlling this market, right? Now we're gonna take off all that crap. That is one example. Come back to our virgin chart, right? Now look at this. Look at this area. Oh, look at this area. I'm gonna draw something for your people to see here right now. Now look at this tool. Don't pay attention to the chart, right? Just pay attention to what I'm drawing. Don't pay attention to the charts. Now, this is another form of liquidity that you're gonna see in the market, right? You're gonna see this always on the market, right? This should be how do you call it? This should be a resistance level, right? This is your resistance. Let's say you see the market do this, right? The market does this. See the market when came back, took out the stop loss of the previous high and dropped drastically, right? And now you're thinking like, oh, I missed this drop move. And what am I gonna do? You wait for the market to go up. Now you see all this drop like this, right? The market is always going to try to fill this previous area of this drop. The market is always trying to do something to fill. Now, when the market was trying to fill it, what would you do? First of all, go up, give a retracement, give you a second opportunity to take a buy if you miss this first move up, give you a second opportunity to take a buy. Once you take a buy here, like I say, a take profit can be a previous high. So if you like, you put 20 pips above your previous high. If you only know the target where you want to take your profit at, which should be the previous resistance level where you see me right now. So if you see the market going up, breaking structures, giving you a second entry, you buy again, drop. This third time you're buying with the main objective being the previous resistance level, because you know that if it reaches the previous resistance level here, it has already filled this fair value gap that it made while it was dropping all the space that were full of bearishness, right? That is a buy opportunity for you. That is a sell opportunity for you. Why? Because you think it have already arrived at its resistance level. Now it can continue only if maybe there is a fair value gap over here or there's an order block here. So in my week, you can send a week up to this area, respect that order block, and before you see the market dropping. So this is what they call the buy side liquidity run, right? The buy side liquidity run, and the opposite of this should be the sell side liquidity run. So the first one I did, you notice it now. This is another one I'm telling you. I will not give you the sell side. You just need to take this and reverse it, and you know how the sell side gonna be. That will be your assignment. I'm not gonna do everything for you. I'm not gonna chew everything for you to take and swallow, because at times it's good to give assignments. So once you do the practicals, you know how it is. That should be your assignment. Now, if we go back to the chart, let me clean up this chart again. If we go back to the chart, you'll see something similar. Like I give you the sell, right? I give you I think I gave you better buy side liquidity. Yeah, I did. My bad. That is almost the same thing that happened here. You see the market did this, came up all to this way. You see the market drop back. Like I said, it's almost the same thing, man. You're gonna see these things on these charts, right? See the market drop back, right? Take out the previous low. Now what did he do? Boom, up to this area. See, the market went bullishness up to this area, right? it's Damn, bro, look at these. Look at these. Look at what I'm trying to tell y'all. I didn't even see this shit right now. But look at these. You see, market start dropping. The same thing, the same graph I did before on the buy. I think it was on the buy side liquidity now, but this is the sell side liquidity that I'm doing over here. You see the assignment, I'm already doing the assignment for you. You see the market drop, give you a retracement to take a buy. Yep, you drop again, give you a retracement to take a buy. And what did he do again? You see the market dropping. Now, where are we? This was the previous resistance area, right? You see the previous resistance area, and there always going to be something like another block here. That's one of the things that's giving me a confirmation for buys, right? This is the resistance area that I mentioned earlier on the buy side liquidity, and now this is the sell side liquidity run. This is a sell side liquidity run. I just mapped on this one. Now you see market drop, it came back on the sell side liquidity run, and there's a something here. There you see the market rejecting of, that's what I took a buy on this and I sent in my chart. And I think some people made a few peeps out of this, and I'm happy. If you make money, you can drop a 111 in my chat, my Telegram channel. So you see the assignment that I even gave you is already done here, right? So like I said, those are the opportunities you're gonna see in the market most at times. You're gonna see these opportunities in the market most at times, right? So everything I teach is I just show you exactly, and I always clean my chart before showing you that. And if you want to take if you want to combine this with Fibonacci, it's gonna be wonderful. I mean, like phenomenal, because if you take the Fibonacci, you take this swing to this swing, you see it goes above the equilibrium, even though it did not reach uh our 0.786 level, but then it gives you a sell opportunity, right? If you reduce the this this swing to this swing, you see give you trading opportunity. Take you the premium level where you want to be selling, right? So all of these, everything is just give you sell opportunities, sell this is a swing area, this is an optimum sell entry that is giving you, right? So you see, when you, this is the only tool I'm using when it comes to trading. This is the only tool you see me using when it comes to trading, right? When you combine this with Fibonacci, you see how epic it can be, how wonderful it will be. You see this last entry that it gave me, this swing to this swing, it gave you entry here. The stop loss could be up here. You see it drops, take out the previous low, right? Drop. And now check this. Check this out. This is another swing here and here. And what do you think he has just done? That's another swing. What do you think he has? He just gave a sell opportunity here. Like I told you, I'm looking for a sell opportunity here. Gave a sell opportunity here. If you miss this, you will look for another sell opportunity. If you're lucky enough for this candle to come back up, you want to sell here, and you can put your stop loss here at the 24,500 level, and you see the market probably drop lower until the previous low then here. So you see opportunities I've already given you on these charts like this, which can make you some couple of Benjamin Frank, and put it into your pocket, right? Like I always say, it is what it is. I'm giving you all the juice and the sauces. My juices that I'm giving you are not to be shared out there. If someone need them, send them to me. Don't be too. I'm not a god. I'm not someone. I also learn from someone. So learn to give credit where the credit is due. Uh, ICT is my mentor. ICT has been the one teaching me everything I know today. I learned it off ICT, and I'm grateful being part of a student of a great man like that. I give credit to ICT. He's the creator of all these. I always give credit where it's due, and I'll tell you, he's a genius. But I ain't got nothing to say. He's the best of the best I've ever seen out there. So I'm just trying to be the best I can be. Yeah, I'm just trying to be the best I can be. So, um, what do I have to say again on this chart? See how I take my analysis and I do my judgment. Um, Something I'm supposed to say. I don't know if I've forgotten that thing. Probably sleep out of my mind. Oh, and you see, it came back to my head. Oh, excuse me. You see, this area, right? If I put this, I'm gonna do this on live with y'all right now. Right now. Yep. I'm not a good singer though. Nah, I'm not a good singer. No, I'm not a good singer. I'm not a good singer. I'm not a good singer. But I try. But I try. Yep. So you see these areas I put the line on, right? I told you about the market sessions and when New York, London opens, right? And you see, what is the time here? 13, which is 1 p.m. GMT. What is the time here? 13, which is 1 p.m. GMT. And I told you I'll be giving most of my time GMT. 1 p.m. GMT is the time where you see New York market opens. And what you see the market will always do most time is you want to see what they call the false swing. This is what they call the judo swing. The false swing. This false swing is meant to do what? To help to put fake and neopol newbies, let's say newbies traders into a fake site for them to think, oh, this is a buy market, let me buy, and you see, it will give a fake movement, and exactly 1 p.m. or 1 p.m. you want to see a fake movement. 1 p.m. GMT, you want to see a fake movement, giving a trade optimum trade entry for a sell position. If you already know where your directional buyer is and you've observed these, now when you see this type of thing happening in the New York market open, you want to see this type of thing happen. When it happen like this, like I told you, sell when they buy and buy when they sell. That's what the smart money does. If you see this movement up like that, it's an opportunity for you to take a sell position and make the market. You see, once you after the judo swing, what does the market do? It drops and take out the low of that 1 p.m. You see the market drop and came back, still drop, came back and closes here, right? The next and closes somewhere. I don't know where it closes. It closes. Asian session was chopping. Same thing here, 1 p.m. And most of the times you see them bounce off either order block or mitigation block or breaker block. You see, that's it. break a block, bouncing last block before the up movement and the downtrend. Break a block, bounce off of that here at 1 p.m. You see what it does? It bounce off of this 50% of this block. So you see the market come here at 1 p.m. You see what the market did. It made us even wanted to go low, come back up, respect this block, and you see the market drop heavily after that. So you see this fake move, this is what they call the swing, the Judas swing, like the false move, right? The false move on the bearish market. If you already knew everything I told you about the liquidity area over here, so now you see it happening here, right? So I think that's what I had to say. That's what I wanted to tell you. So with that being said, I hope this class was what helpful to you all. See you at our next classes.